Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. All right, we're going to start out, as always, with the S&P 500. Okay, so in the last 2 weeks, we've had an amazing run-up. It hit, this is the daily chart here, it hit the 200 the 400 daily moving average, shot past that, shot past the 200-day moving average, and now it's kind of settled the week at 44.15. So just stopped right there, just above the 150 moving average. Looking to me like we could actually have a little bit more upside to this come on Monday, Tuesday. But after that, we would expect it to start to roll over just a little bit. Next level of resistance is going to be just up above that, like right around, what is that, 44.60, somewhere in that range. So wouldn't expect it to go past there. Moving on to the dollar's still holding strong. Closed the week at almost 106. Just shy of that. So remember, the stronger the dollar is, the fewer of those dollars it takes to buy commodities like oil and gold, which would drive them down. All right, moving on to gold here. This one is pretty exciting. We had John Lee on the show last week. He was saying that he really thought that the 200 moving average needs to hold here for gold. Did not hold on Friday. It blew right through that and touched right on the 50 moving average. But, it's had quite a run up here. I'm going to throw in a Fibonacci here for you and take a look at this for gold. The level that we're going to want to probably buy at, we'll see what the technicals look at there. But this one right down here is around 1920, and then another one right around 1900, which lines up perfectly with a lot of support going back over time. So wouldn't be surprised at all to see it get down to 1900, but I don't see it getting much lower than that. Now, what's interesting about this is I love this software, by the way, TradingView. If you guys want to get this same trading software, there's a link down in the show notes. If you're going to get it, it's an affiliate link, so that'd be a way you could support the show. But here what we got is we've got the 10-year Treasury yield minus the 2-year Treasury yield. So if we zoom back out over time, I'm going to bring up the monthly here, and I put in these arrows, which should illustrate my point. All right, so basically this white line, the way you can think of it is that's basically 0%. So this is how much is the Treasury, how much is a 10-year bond giving you, minus how much is a 2-year bond giving you, right? So whenever it's below this white line, that means we're in clown world, and the government is paying you more to let them borrow money for 2 years than they would for 10 years. That doesn't make any sense, right? They should give you more if you give them money for a longer period of time. But right now we could see that the 2-year yield is paying 0.415% more than the 10-year yield, right? So any of these areas down here below the white line is clown world. We got really down into clown world over 1% not too long ago. That was like the funny house with the mirrors. Right now we're at the point where we're just throwing darts at balloons hoping to win a goldfish, but we're still in clown world. So basically what this is, if you look at these green arrows here, okay, and then we're going to go to the gold chart, and we'll bring this up on the monthly, and we put in the same kind of arrows here. So you can see the green arrows there and there. And if we go back here to the 10s and the 2s, basically what we plotted was when we're down in clown world and the 2 pays more than the 10, and then when we end that all the way up at the top when the 10 is paying more than the 2 at the highest point. So we got these 2 here. Look at these 4 examples, and we're coming up on the 5th one since back in the late 80s. All right, now we're going to go back to gold. The first one, the green one, gold did not make any money on that. We went from, inverted yield curve, and gold from this point to this point actually did not make any, did not go up in dollar terms. Now, the next 3, it did, and especially these last 2 here, it was really impressive. I mean, just a heck of a move. And now we're starting the 5th one in the last, what is that, 40 years or so, 30 years. So where does it end up? Typically speaking, generally speaking, when the curve uninverts, that's when gold makes a big move, with the exception of this last one, the first one over here in the late 80s. But look at how far down we got, and where is this going to end up going? It's probably going to go up just like it did last time, where the 10 pays almost 3% more than the 2. But what kind of move are gold and silver going to have when that happens? We shall see. But typically, at this point, is a really, really good spot to buy precious metals. So, it's going to take time to iron out, but we'll see how that plays out. All right, moving on to GDXJ, a leveraged bet on gold, on the major gold miners. Next level of big support that we have is kind of like where we are right now. Close the week at 27.25. If we just move this little white trend line up, yeah, kind of around there. Next one down, we've got a gap up back here about a year ago, but that'd be around mid 26s, something like that. GDXJ, pretty much the same thing. The graphs look almost identical. A decent point to get in might be now. It's blown through the Fibonacci. I could draw it, but I've seen it enough that you guys understand. Next real level of support is going to be around $30.50, something like that. All right, silver. This one's exciting because what we got here, at least in the daily, closed the week at 22.28, so dropped out of the sky a little bit. We were at 23 last week, but check this out. If we draw in a Fibonacci right here, look at where we're just starting to hit. Okay, so anywhere kind of in this range here between, what is that, 21.96 and 22.33 is kind of in the buy zone. Ideally, what we want to see here is we want to see a double bottom in this buy zone and then reversing up. And then we can place another leveraged bet, probably on something like SILJ. SILJ had an, let me get rid of this so we can see this. We'll get rid of the volume here so we can see it a little bit better. Okay, there we go. Now, check out this double bottom here that has taken, what is that? Over a month, probably a month and a half to maybe 5 weeks to come to fruition. But what we got here on Friday is a reversal bar going to the upside. So kind of like a bet a lot, like basically when the market opens on Monday of SILJ, we probably could have taken some profits back here, and maybe we should have, but we just believe that silver is going to have such a monumental run. The difference is in these couple dollars when it actually has a run. I mean, you guys could see, going back over history, I mean, this could be an easy double, possibly triple when silver gets up to like 28. These junior silver miners are so leveraged to it. But if you don't have any position in SILJ and you think that the silver price is going to go up, now is a pretty good time to place that bet, we believe. All right, moving on to copper. Copper futures. Copper closed the week at $3.58. Is a bit of a, let me see if I can draw in a Fibonacci here. It looks like it kind of blew through it a little bit. See if you guys can pick it out before I actually place it. Yep. Yeah, blew through the Fibonacci a little bit. I think the next level of resistance down is going to be around kind of where we are now, but the real one's going to be around $3.50. So we'll see if copper gets down there. Leveraging that with COPX, the copper miners, also kind of like an entry around where we are now. We made one 2 weeks ago. It's gotten a little bit cheaper. In a recession, copper is probably going to get washed out, but there is a whole lot of support right around where it is right now on COPX. Leveraging that even more with Arizona Metals. This one has been dropping out of the sky. Got some questions as to why. I don't know, other than we're just in a radical bear market for commodities, which means the deals are getting better and better by the day. We're having Rick on the show on Monday. We'll pick his brain on Arizona and see what he says. But I mean, not stochastic, RSI, MACD are down in the toilet. I mean, is there going to be a reverse up here? I think eventually. We shall see. We shall see. All right, moving on to uranium. Closed the week at just shy of $74, pretty much even with where it was last week. So that's the yellow cake price. Moving on to the SPUT Physical Uranium Trust, your favorite uranium store of value and mine. Love this one a lot. It is just shooting the moon. Got to get it to break right through this 1833 level. and then we'll be off to all-time highs for the trust. Leveraging that on URA. Okay, I don't really see any buy points lately for URA, other than, remember we talked about last week, anytime it kind of approaches this white trend line here, which is moving right in line here with this 50 moving average, if you don't have any position in uranium, this would be one way to do it. You got two opportunities last week, one on Tuesday and then another one on Wednesday. So if you can just put in a limit order along those along that 50 moving average, it's trending up. Same thing for URNM. This one we like a lot more because it's a pure play on uranium. But if you just have limit orders in right around this 50 moving average, you know, don't place all your bet at once, you know, spread this out over 10 or 12 bets. But, you know, these could be some entry points for you if you don't have a position in uranium yet. If you've been with us for a while and you were buying all back here, just sit back and watch. No need to get more. But if you haven't had a position in uranium yet, we still believe there's going to be a big move, and you know, you can do so now. Uranium Royalty Corporation, like this one a lot. The only royalty play on uranium, we're talking about the cup and handle pattern last week that is forming up in this one. We still have a limit order in here for $2.50. We'd just like more, yeah, we think this one's going to do very, very well over the long term for uranium. All right, Rick wants to know about deep yellow. All right, so we got deep yellow here. Let me go out to the weekly chart, and then this will give you a better idea of the time horizon of this one and what kind of run this thing can happen in this stock when it goes. So this is basically the check out this move back here in 2000, and then we also have the Fukushima meltdown, which did not help this stock at all. But long term, this is what you're looking at. There is a boatload of resistance around $1.40. We closed the week at $1.14. As far as an entry into here, one that I would like a lot is if it came back down here to the 200 moving average, which may never come. But if it did, anywhere around 75, 80 cents, something like that, I think would be a good entry point. We'll have to see what the technicals look like. But right now, RSI, MACD are just way in the clouds. You know, I wouldn't want to place a bet up here at all. Okay, moving on to natural gas. Devon Energy's kind of gotten some interesting entry points. A lot of resistance built up. Here's, you can see where we got our 3 ones after we talked with Rick Rule. We're like, okay, we need some natural gas. Place 3 bets right there. We're about even because we got all, you know, one cheaper, one same price, and one above that. But kind of a neat setup here. We had a reversal bar there in the weekly, and shot up on Friday. I'd rather see this come down and kind of do a little double bottom here. Moving over to Equitable, another natural gas play. This one I would like for an entry a lot more. RSI is getting low, so is MACD. You know, nice level of support right around $38, something like that. So if it were to come down and touch that, would like that a lot. Maybe it'll come down here and kiss the 200 moving average. Yeah, we'll see. This is another natural gas play. And Nolan also wanted to know about 3 other natural gas plays that we got from Rick. One is Tourmaline, and this one just shot down after their dividend, and they did a split. So as far as a technical entry, I mean, boy, that would have been a tick if you could catch it right there when they did that day. But since then, we've had quite a run up. Want to see a little bit more time on this one and see how it irons out as far as any kind of technical entry. There's just not much to go on since the dividend and the split. And also ARC Resources, another Nat Gas play here. This one's pretty interesting. Maybe not a bad entry point right now, to be honest with you. If we draw a trend line, I mean, this kind of looks like the URA chart in that just about anywhere along there or the 50 moving average might be an interesting play. I mean, you know, you got dividends popping up here every few months like clockwork. I don't know. I think this would go in the dividend portfolio and just kind of set it and forget it. Okay, and then also Birchcliff. This one, I think out of all three, I kind of like as a technical entry the most. There's a lot of resistance. I'm sorry, a lot of support built up right about where we are now. If we bring this out even further, you'd see it, but I'll save you the time. And yeah, got a essentially a double bottom right here with a reversal bar going to the upside. I mean, these guys, they pay dividends out like clockwork as well. If you know fundamentally about this company, as far as on the charts, this one looks the best to me. All right, moving on to crude oil. All right, this was an exciting week. Okay, so we started out at around $80 for the week, and then it shot down and got all the way down to 75, and then we closed the week at 77 on crude oil. We did place a bet at 75. I almost did an episode on this one. I just didn't have the time. Yeah, we caught a tick at 75. We weren't betting the futures themselves. We were betting Exxon. Yeah, I think this is a pretty neat little point here to get into oil. It's probably not going to last very long. We actually hope that this gets cheaper so that we can add more into our oil what do you call it, portfolio dividend side. But here's XLE. We actually did a trade on this one. We bought in with the up arrow and then we closed it out at the down arrow. So we realized we were wrong for that short-term trade. So we lost, I think it worked out to be 0.5% or something like that. So that's what's kind of nice about doing those stop limit is if it turns out you're wrong, which you're going to be a certain percentage of the time, then you get out and it really doesn't cost you much at all. So pretty cool. So hopefully we'll iron out a bottom right here in XLE, assuming that the commodity itself starts to level out around $75, $77, then I think we'll get it. And the bet we placed on that was XOM, so Exxon. We bought in, I think, 107, 106, 105, and then we caught this tick down here at 103. So like an Exxon a lot over the long term. They just paid a dividend, so it dropped out a little bit from that. And we caught the tick, and basically you start the clock. All right, and let's see. Dan wants to know about Marathon Digital. So this is basically, I think, a Bitcoin miner. I just looked at it real quick. I hadn't heard of them. As far as anything technically on the charts, maybe a little bit of an uptrend right here. Okay, let's draw this out and see what we see here. For Marathon. No, not really, not seeing it there. Dan, I'm kind of feeling like what we need here is we need this to get above this purple line here, which is the 200 moving average. See, this offered a lot of support back here. And I would like to see this stock shoot up past the 200 moving average. And that would cause this 50 moving average to shoot through the 200, which would be, you remember the name? A golden cross. Okay. I would like to see that happen. Then I think I would feel a lot more comfortable about this bet. I don't know a whole heck of a lot about Bitcoin. I just know that I bought one years ago and then I sold it and bought a truck. That's my experience of Bitcoin. Not very much. And I really don't know much about this company at all. However, technically, I would like to see the price action move above the 200 moving average. And that would drive the 50 moving average above the 200, creating a golden cross, and that might create an opportunity. So take a look and watch out for that. All right. Hope you guys got something out of that. Support the show, hit the like and the subscribe. Next week, we've got Rick Rule coming up. So go to the post and submit your questions there. And we also have Jordan Roy Byrne, our resident gold and silver expert. You guys have a great rest of your day, and we will talk to you next time.